So hello guys, this is Anshuman Rawla and welcome back into a brand new video. And this video is going to be a very interesting video because in this video I will be breaking down my recent trades which I made today itself in this account, and the account is in front of you. And we started this account with initial balance $25,000, and the interesting part is we started this account today itself, and within a single trading day, as you can see, uh, this is the first trading day of this account, and within a single trading day we made around $2,600 of profit in a $25,000 account. And let me show you the trading overview, and also I will be going through the trading statements for complete transparency purposes. And as you can see, the complete trading journal over here, the profit factor, the loss rate, the win rate, long swan, short, the every trade I took in this account today was probably sell side trades, and the gross profit was $4,242, and the gross loss was around $1,512. And total number of trades taken in this account were 13. And if we jump into the analytics, and you can see we started it at March 17, and today is March 18. So within a single trading day, we passed our profit target, and there is still minimum trading days criteria left, and we just have to open and close positions with any lot size, and that criteria will be fulfilled. That's not of a big deal. And yeah, the only pairs I traded were gold and euro USD. And yeah, if we jump into the win loss ratio, this is the loss ratio and this is the win ratio. So let's jump into the trade breakdowns. This was the account overall, and let's jump into the trade breakdown, that what actually happened in the market. So the most I made was in gold during London session, and before the gold trade, I traded euro USD, and I also made pretty much decent profits in euro USD too. And let me show you the euro USD trade before jumping into the gold trade. And if we jump into the euro USD chart, as you can see, the recent trade which I made, let me show you. Yes, so as you can see, 18 March, today is 18 March, and this were the trades of euro USD. So what happened here was, if we zoom, can we zoom in more? No. So this were the trades actually, and let me, this is the MetaTrader platform in which I execute my orders, and to show you the exact trades and what happened actually, to show it to you clearly, I have to jump into the TradingView platform. So let me first see where I took the trades. So around here, and if we jump into the euro USD chart, so somewhere around, this is the minute 5 time frame. Okay, that's why we have this trades with very back. Okay, this is the minute 30 time frame. So in the 30-minute time frame, as you can see, yeah, I already marked here. I forgot that I marked here in TradingView. So let's jump into the TradingView, and let me show it to you. Let me show the trades which I took in euro USD in a very clear form. So what happened here was, so I was actually trading the 15-minute time frame, and in euro USD there was a volume. And if I show you that when I took the trade at that time, just London, as you can see, the blue box here is a complete London session, and at this point London session has started, and in the second candle, the second 15-minute candle of London session opening, I executed my trade. And when did I execute my trade? As soon as the candle started showing me volume, and as soon as the candle started breaking this rejection points, so basically, you know, I was completely sure because the volumes is going to kick in, because it's a London Open. London session just had the London session has just started, and there are high probabilities for the price to, with high volume, there will be volume kicking in, and the price is going to drive at that particular direction where it shows that the price is going to go. So due to the volume, it's just the game of volume. Volume is what driving the price to the desired direction in which you are trading. So as soon as it showed me the volume, and I just executed my trade. And if you see, there is a clean range on the left hand side also, but still then I wasn't confident enough, because it's not that clean. But if we jump into the 30-minute time frame, it's a clean range. Yeah, it's a clean range. If we see this range over here in which I'm marking the cursor, if you see this is a clean range because we have no wicks in this candles. Means something. You know what it means is, uh, there is there is no lower wicks on these candles, but there are upper wicks. So what does it mean? It means that uh, the buyers are in control. You know, the sellers are trying to push down, but they have no power. The sellers have no power. So you know, buyers are in power, and they are moving the price upwards. That's why there are no down wicks, because the buyers are in power. So this is what it means. So you know, but this bearish candle over here broke all of the conditions which made by this structure, and it gave a complete bearish, full volume bearish candle. And it structured, it gave a structure of a this this is bearish engulfing structure. This proves that sellers are sellers have again gained the power, and the price is most likely to drive downwards in a bearish direction. And also there was London Open, so there were high probabilities for the price to move in the bearish direction. And as you can see, this bearish candle has had no upper wick. As you can see, it had no upper wick. Instead, it had only a down wick, which means there are, the sellers have gained power and the buyers have lost their power. And this is the complete opposite psychology of this structure. If you know, you know. So this is what gained a very instinctual. As you can see, some trades are instinctual. They just happen, and your mind just tells that, yeah, this is the best trade. You have to, you don't think before taking these trades, because they tick all the boxes. They fulfill all the conditions which you have made during developing your trading strategies. So this is what the trade is all about. And if you jump into the 15-minute time frame, then this is what the trade looks like. This was a complete 5.515 hour trade, and yeah, the stop loss was just above this bearish candle, and the take profit was around here at this common rejection point. So this was a Euro USD trade, and after this trade, the actual thing was, I pretty much made around five, six, $700 in this trade. I pretty much made around $700 in this trade, but again, I lost around 8, 9, 10. If you jump into the trading history, 8 to 5, 8, 9, 10, 11, 12, 13, 14. So $1,400 again. After making $700, in this trade. I lost around $1,400 in the second trade. The winning trade, at last, at last, at last, but not the least, the winning trade, the very big amount I made was in gold. So today, gold gave a pretty big move, as you can see. It gave around, after this breakout over here, gold gave around, gold gave around 132 pip move. Gold gave around 132 pip move after crashing and after giving that breakout towards the bearish direction. So within this 32 pip range of movement, I captured around, as you can see, let me show you the trade of gold. So this is the trade of the gold. Actually, this is what, you know, this big green candle, as you can see, this is where I made my first trade in gold, and it was also for the sell side. But still, then the market rejected and went back up, due to which I lost a pretty hefty amount in gold also, which added up to the $1,400 amount. So this was the first trade in gold. As you can see my trading history, I lost a pretty good amount. I lost a pretty good amount in gold also, as you can see, XAUSD, and I lost, yeah, I lost a pretty good amount in gold also, 800 plus 200 plus $300. So mostly, most of my trade which I lost was not in Euro USD. It was in gold itself, and this was the trade. As you can see, this trade in the green wick candle. So this is where I lost most of my $1,400. But still, then I covered it all in a single trade in gold itself. And how did I cover it? As you can see, as soon as the market started moving down, and let me show you in TradingView so that you can understand it clearly. So in TradingView chart, as you can see, the market had a very great support at this, as I marked here. It's a very strong support, and there were high probabilities that if we get a break and close below this support, which we did in this candle, in this bearish candle over here. So if we get a break and close below this support, then there is a high probability that price will be crashing. And whatever we predicted, exactly that happened. Whatever we anticipated, exactly that happened. And there is also a very clean range on the left hand side, as you can see. So we were anticipating for the price to break and close below this support zone, and also to cover this clean range over here until this next support zone. So this was all our strategy. And there was also, if we see the session marker, so this happened, this all thing happened in between London session, not in London Open, not in pre-London, in between the London session. So it was, the timing was little odd, but still then we catch the trade. So yeah, this is where we made most of our money. And yeah, this was one of our successful trades. And if I show you in the MetaTrader platform with live order execution, then this was the trade we executed around here, as you can see, with zero point 0.8 lots, multiple positions with zero point 0.8 lots, around 3 positions. I executed around 3 positions with zero point 0.8 lots, which makes around uh, 1.6 and 2 3.2 lots. So around 3.2 lots I executed in gold, which is, it's a, I would say, very big lot size for a $25,000 account. But still, then there was volume, and I had that risk appetite. But one of my mistakes here was I took a very large position. So basically, in short, I oversized my position, which is one of my mistakes, and I have to work on it. But still, then we made money. And So this was all for the video, and this was all for the trade, and we executed around here. We closed around here, and also after this move, we also executed our trade around here and also closed our position around here. So here we captured some move, and also we captured some move around here. So we didn't capture the whole complete move. We just captured the chunks of this big movement. We don't need to capture actually the whole complete move. We just need some pips. As you can see, to this, I would say we the second trade, the first trade in gold was in loss. This one we lost around $1,400. Okay, but here we captured around, maybe 10 pips, and here we may have captured around 4 to 5 pips. So, but the whole complete range was of 132 pips, 132 or 135 pips. So out of 132 pips, we captured only 15 pips, and within 15 pips we covered our complete we covered our whole complete losses, and we came back into positive, and we also passed our profit target. We just needed some pips. That's it. That's what trading is all about. If you have a very good risk management, then you can do anything and everything. Even though if you had a great drawdown, even though you had a great very big drawdown, still then you can make it up if you have a very good risk management. So this is what this video was all about. This is not just a winning trade, it was a winning lesson for you that risk management is everything. You have to learn to manage risk. Even though if you are in a very big drawdown, you still need some, 15 to 20 pips. That's it. If you manage to capture 15 to 20 pips in gold with the correct position size, then you can do anything. And you know, you don't have to cover all of your losses in a single big trade. That's completely bullshit. You have to target, even after a losing streak or after a big loss. You have to target and you have to claim the loss, and you have to cover those losses with small chunks, with small wins. And you don't have to target, you know to cover up the whole loss in a single big trade, in a single big winning trade. You don't have to target to hit the home run, but instead what you can do is you have to focus on small wins. You have to you know learn how to claim, how to book those small profits. Even though your losses are big, still then your mind would have been telling you that no, don't claim this small floating profit. Let it grow more. But what happens instead? It goes into drawdown instead, and the reverse happens, and you lose even. The account which is in minus, the drawdown increases even more. The loss increases even more. So this is what we have to work upon. The traders have to work upon. So yeah, this was all for the video, and hope you liked it, hope you enjoyed it, and hope you have learned something from this video. And the video have went too long, and yeah, let's just wind up. And yeah, make sure to like, share, and subscribe. And once you want to download this site, signing off. Peace out.